The stock market slipped slightly today after reaching near record highs over its 8-day winning streak. It would have been the first 9-day winning streak in almost 2 decades. Earlier this summer, the Dow Jones dropped nearly 10%. The news comes as Bloomberg reports U.S. job growth through March was likely far less robust than initially estimated. And this could mean the Federal Reserve will not lower interest rates. For analysis, we turn now to Dr. Jeffrey Campbell, economics professor at the University of Notre Dame. Dr. Campbell, great to see you again. First off, what has led to the sudden spike in the stock market, and could the markets go even higher?
Well, the markets are going to go up and down on a daily basis, and if I had the magic wand or the crystal ball to understand what made that go up, I would not be talking to you about it. I'd be trying to trade on it. So honestly, most of us, the markets sometimes have a mind of their own. There's always a jump to pretend that you understand what's going on, but I'd like to stay away from that.
Well, if you trade on it, hope you still speak with us. On to the jobs report and the likely revised numbers being down from what was originally forecast. Tell us why this matters and what it could mean for the U.S. economy.
Well, the reason it matters is because it's a signal in the wrong direction that the economy is a little weaker than we thought it might be. Now, I say only a little weaker. Let's not overemphasize the latest piece of news we've gotten. There's plenty of other news out there that says that the economy is growing strongly. And so, and on net, and I'll repeat what I said before, that we are kind of on the margin between a recession and a successful economy. And it's going to take some luck to keep us, either good luck to keep us on the right track, or bad luck to push us off that track.
Changing gears slightly now, we know you are helping with the America First Policy Institute on the transition should former President Trump win in November. That being said, there's been a lot of talk about the economic speech that Vice President Kamala Harris gave last Friday. In fact, Forbes Magazine says her proposals are a recipe for a depression. What did you make of her proposals?
So first, let me clarify with the America First Policy Institute and Transition Project. I have a very small role in that. By no means am I leading anything there. I'm just answering questions when they ask. Now, going on to Vice President Harris, her proposals from her speech and rally the other day were frankly not very coherent or promising. There were 2 big ones there. One was to somehow ban price gouging for food. The problem with that is that what one person's reasonable price is, another person's price gouge is, and defining that is really hard. Vice President Harris asserted in her speech that there were bad actors colluding on prices. But if she or anyone else in the federal government had real evidence of that, the Department of Justice and the FTC would already have been very much on it. I was going to say the other piece of that of her speech was the other concrete proposal was a $25,000 down payment insurance assistance for first-time home buyers. That it gives me an opportunity to talk about the economics of supply and demand. That's going to push up demand for housing while doing nothing for supply. What we really need are concrete proposals for increasing the supply of housing.
In our final few seconds together, any other economic news you're following that our viewers should be aware of?
No, I've got my eye on the election like everybody else. The Federal Reserve will have their annual conference in Jackson Hole this Friday. And the theme of that is reassessing the effectiveness of monetary policy. I wouldn't read too much into that, but at the same time, it's a welcome time it's a welcome event that the Fed is stepping back and asking, what can we accomplish and what can't we accomplish?
We'll keep our eye on that. Dr. Jeffrey Campbell, thank you.
Thank you.